I'm Charlotte McLeod with investingnews.com, and here today with me is Maria Smirnova, Senior Portfolio Manager and Chief Investment Officer at Sprott Asset Management. Thank you so much for being here. Great to have you.
Good morning, Charlotte, and thank you for having me.
Really good to be meeting you in person for the first time here at VRIC, and it's been a little while since we had the chance to talk, so lots to catch up on today. I thought we can start with the gold price. So of course, we're coming off a record-setting year for gold, and many investors are wondering, are we going to see a repeat performance in 2025? So what are your thoughts?
Certainly. I think last year was a really good year. Gold was up 27%, I believe, and silver was up about 21%. And even the equities actually were up as well. So we had a pretty good year last year. Now looking forward to this year and beyond, the drivers that we see for both gold and silver that were in place last year are still there. Things haven't changed from last year to this year. So even if we don't see such a strong price performance, for example, in gold, 27%, that's pretty hard to beat. I would say that we should still have a good year this year.
Yeah, so we'll have those same drivers staying in place. Can you talk about the main ones that you're keeping an eye on?
Okay, certainly. And for gold, one of the big drivers that people talked about last year was, of course, central bank buying, but also buying out of the East, buying in China, both retail and institutional. Both metals actually, both silver and gold, oftentimes traded at a premium in Shanghai, which told us that, of course, there was strong demand in the East, or specifically in China. And for silver, as you know, silver is metal of two heads. Again, investor demand, and then there's the industrial demand. For silver, the silver was in deficit again because demand was stronger than supply. Again, the drivers that were there last year, I would expect to remain in place this year. And again, we're expecting silver to be in deficit, inventories to decline, which will ultimately lead to a strong price, I hope.
Yeah, and so silver, of course, as you're mentioning, has many of the same price drivers as gold, but as you also said, it's got its industrial side and the precious side. So which one do you think might take the lead in 2025?
Well, again, I don't know if it's as important for me to dissect which specific sector or which specific driver will be driving the bus. But for me, what's important is what's the overall picture, right? Demand, I expect to grow still this year. Supply, I expect to be flat this year. In fact, I've been saying that silver supply has remained stagnant and even declined about 50 million ounces in the last 10 years. That's very significant. That's telling us that miners just have not been able to increase production. Actually, the scrap supply has been stagnant as well. So that really speaks volumes to where the strength will come from in terms of the price, because we're just not able to provide enough metal to the market that we are that we need. And that has led, as I mentioned, to inventories declines. So we've lost about close to 500 million ounces in the last few years since 2022. That's very significant in this market. The market is about, we produce about 1 billion ounces a year. So to lose 500 million ounces almost in a few years, 2-3 years, that's very significant. And again, we're expecting deficits to lead to declines again going forward. Okay.
I'm going to come back to that deficit for silver in just a minute, because I think that's important. I think we know the price of silver is known to lag behind gold and then it outperforms, but I know our audience has a lot of questions about why we haven't seen more of a move yet. So will that happen in 2025, or do we just need to be a little bit more patient with silver?
Well, unfortunately, my crystal ball is still broken. But again, I don't know if it's going to be this year. We would expect, the other data point I will give you is we're actually mining, the gold to silver ratio is about 90-1 right now, 80 or 90-1. We mine about 10-1. So that's how undervalued silver is. There's a huge delta. Now, in the last few decades, you could use different averages of the ratio to measure how undervalued it is. But let's say even if we go back to 50-1, that's a huge catch up on the silver. And again, in terms of timing it, it's hard, but what would lead to a catch up on the silver price? And that is a squeeze on those inventories, right? We need to continue to see the inventory decline. We need to see strong investor demand. We need to see somebody at the conference actually called it a giffen good, meaning if price goes up, there's more demand actually. So it's potentially price inelastic, but also if we see some momentum in the price, that starts feeding on itself. So to time that, it's very hard. We've seen periods of time, in 2020 we had a great year. So it kind of goes and stops, and starts and stops, and so I don't know how to predict timing, to be honest with you.
Yeah, well, I think most people don't. So thank you for going into it though and making the attempt to explain. I think just going back to the whole silver deficit, I think one reason people get frustrated with what's going on with the price is because they see this deficit that's persisted. I think we're going into the fourth year of deficit for 2024 for the market. So we've talked about that a little bit. I guess it sounds like, why isn't that moving the price, that we just need to see a little bit more on that side?
Right, we need to see a continuation of those trends. And again, the big knock on silver has been, there's so much silver above ground stocks, billions of ounces. Well, we're starting to see the deficits leading to eating through those inventories. That's why I keep coming back to that argument. That's where the argument could change, right? And that's where that pushback could fall away, basically.
Yeah, I think that makes sense. So we'll continue to be a little patient on silver. And I guess looking over to the gold and silver stocks, where are you seeing the most opportunity right now? I know previously, this was a while back, you'd mentioned the small to mid cap space was most interesting. Is that still how you're feeling?
Absolutely. We're definitely small to mid cap managers. In fact, if you look at the two bellwethers in the space, Newmont and Barrick, their stock prices have not done well recently. But the mid caps, or the smaller companies, have done much better. Last year, we saw very strong returns on a bunch of our holdings, and that was very encouraging to see. So that's kind of still our strength. We're seeing valuations, still at bottom levels, especially if you consider valuations for gold companies versus the S&P 500, much undervalued relative to the general market. And I would add that gold and silver companies have been generating free cash flow. A lot of companies are actually increasing dividends or paying dividends, buying back their stock, accumulating cash. I mean, we're seeing a lot of signs that are pointing to the fact that these stocks should do well. And that's the type of companies we look for.
Okay, so really good to go over that, but we're here at VRIC in Vancouver, and I want to talk a little bit about some of what you've been doing here. So you were on a panel yesterday, I believe, called "Why Cash is the Most Important Resource in the Mining Business." So very intriguing. Do you agree with that statement, first of all?
Well, I think we had a very good discussion yesterday about that. And what I said in the panel was that I actually take a bit of a holistic approach when I look at companies. And to me, there are three major kind of buckets that I look at. The financials, which would include cash and other things, the team or the people, so management, CEOs, et cetera, and the resource. So your location, your geology, your, all of that great infrastructure, all of that great stuff. So I don't know if I favor one thing over the other. I kind of look at it holistically. But of course, and at VRIC, we have a lot of smaller companies that don't have production. So for them, I think it is a very key resource to have, especially in times when times are tough. When it's hard to raise money. The other thing I think we kind of determined on the panel yesterday is that it's good to raise money when the going is good. So when the market is strong, raise the money, have a cash kind of cushion so that you can do the work that you'd like to do in the next year or in the next 18 months or whatever it is. So those kind of were our conclusions. So it is very important. I don't know if it's the most important thing, but it's kind of very important.
So I think often when mining companies are raising money, investors might look at it and they don't really understand what's going on. So how might somebody decide, I want to participate in that?
Okay, so let's say there is an equity financing. First of all, you need to determine whether you've analyzed the three things I said, right? The people, the asset, the financials, and you realize, okay, this company may have good assets and good people, but it just doesn't have that cash that we're talking about, right? And all of a sudden you have an opportunity, your broker calls you and says, hey, we have an equity financing. So I think my first thing would be, do I want to be a shareholder of this company? And if the answer is yes, usually equity financings usually are done at a discount to market price or spot price. And sometimes there's warrants or not, and sometimes you have to hold the stock for 4 months after, or sometimes you can sell the stock next week or whatever. So you can kind of look at those things, and you know, then you have to think about, again, going back to, do I want to own this company? And if you're comfortable with the longer term prospects, I would say, you know, maybe then you go ahead, right? But again, it's a very individual case by case decision, and I'm certainly not a financial advisor. I would not advise people either way on anything. So it's a very kind of, you have to kind of consider it as part of your portfolio as well, right? Does this fit into my portfolio or not? You know, do I have a lot of exploration stocks already, or maybe I need a couple to kind of soup up my portfolio?
Yeah, this is one of the themes I think I've been hearing a lot this weekend here is, you know, you have to know yourself before you start doing anything. Yeah. Okay, so cash, we know this is an important component for all companies in the mining industry across the spectrum, especially juniors. What is the financing environment like right now for these exploration companies?
Well, I think you'll hear different opinion on that question. What I say is, I think if it's a good company with good assets, they will find the money. We've seen lots of financings get done, a lot of them oversubscribed. And again, it's when people realize, well, first of all, we do have a shortage of good deposits right now, both in gold and silver and copper and other metals. So when there's a good deposit, people want to participate, and those companies find the cash. So, and it is our job to weed out the bad actors, and not, the companies maybe shouldn't be around. So those companies shouldn't be financed anyway, right? So from that perspective, I think kind of the money is there if it's a good company, I would say. Yeah,
I think that's one of the reasons I like to ask that question, is because you do get such a range of answers. Right. And I like that one where, yeah, of course, if you're doing a good job, you will get the money. Okay, so that's really good to go over, and I think timely with all of those juniors downstairs. Maybe a fun question. I know you said the crystal ball is out of commission, but 2025, any thoughts on what might be our best performing commodity?
Well, I'm biased, as you know.
Of course.
And the truth be told, I don't follow all commodities closely. But of course, we're greatly involved in things like uranium and copper and even lithium to a smaller extent. But I guess for me, if I had my pet is silver, and I really hope that it's, as we discussed, starts catching up to gold this year, because really we're in a situation where there's a shortage of it, and there's no reason for it to be lagging.
Yeah, I think that would resonate with a lot of people. Okay, really good to go over what's going on in gold and silver, a little bit of the juniors. Any final thoughts for investors that you would want to leave people with?
Hang in there. I know it can be frustrating sometimes. Certainly small companies have underperformed the larger companies, but there's a lot of value out there that I see. And just don't give up, stick with it, and that would be kind of my advice to people. But again, look for good companies. Don't spread yourself too thin also. You know, just focus in on the ones you really understand, you really can follow and have the time to follow. And that would be kind of my unsolicited advice.
Yeah, well, I did ask, yeah. So thank you. I think that's a great note to end on. Thank you so much for going over these things. And as I said, good to meet you in person. Hope to have you back again soon.
Thank you very much, Charlotte. Have a great day.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Maria Smirnova. Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.